Hello YouTube, it's Steve here, and we'll get right into it. So we had the EIA report today on natural gas. I haven't really been paying attention to a whole lot of the other macro events and stuff. Um, so let's talk about what's been going on. We are down about 10 grand from where we were yesterday, which is fine because our open profit's still about 25 grand, especially considering we came up from 59. So being up at 89 and almost 90 that's just fine to me. So the S&P took a tumble, and I've been kind of watching it for the last couple of days now. Looking at the 8-hour chart, you can see how we kind of started floundering here, for lack of a better word, and there was just moving in this range right here. Whenever you identify a range, it's a good time to start picking which direction you want to go in for one of these big moves. It's one of the fundamentals of price action, is trying to trade off of things like that, make an anticipation rather than following indicators or something like that. I just like indicators because I'm indecisive sometimes. But anyway, so today on the intraday, when I was trading my own account, I was pretty much short for most of the day. I did a couple of long scalps a little bit. But other than that, yeah, I was net long. I was only really day trading on ES. I also did like a couple of trades on oil on the nearest contract because I've currently been in a long trade on the further one out. But that's just a personal thing that I like to do sometimes. But anyway, so we passed around down past the our what I would consider a major support level here, going all the way back to these candles here. And I decided at some point during the day that, yeah, this is going to keep going, and so I hopped onto my TradingView account here and just opened up a short on this one, which is fine. We were still in a profit from the previous long trade because I had opened that up all the way down here. So we came out with I want to say around like 20 points, give or take. So we, lost quite a bit from when we were up at the peak here, but that's still not really a big deal. It's not real money, but at the same time, we were still in a gain, and when you're swing trading, that's the important part. So moving on, we'll take a look at gold, which again just likes to repeatedly kick my ass on like everything. Which, I mean, it was kind of expected that it was going to come back down because like we've got a whole bunch of candles right here that just kind of stopped after the major fall from back here. Gonna switch back over to the 1 day now just to keep everything consistent. We're still flat, which is good, but I would like to be in a profit for obvious reasons. We're still crossed over, so I'm just gonna leave this trade as is. But we're gonna need to keep an eye on this one. If it's red tomorrow, we're definitely gonna be going short. However, if it's a green candle tomorrow, then I think we might have a chance of breaking out here, depending on the volume. So for now, we'll leave that as is. The Russell continues kicking my ass. Move back over to the 8-hour for this. So we did have a cross under on this one. I wasn't paying attention to the Russell during the intraday really so much. Otherwise, if we had actually been trading on this one, then we would have taken the short signal on this at some point during the midday, rather than taking a 1,600 point loss. But now we are crossed under, so we're going to fix this right up. Switch over to short. Now we are good as you can be when you're trading the Russell and you don't like it. Although I am actually working on a strategy for day trading the Russell on the tick chart, so I will figure that out. So far, I've got most of my rules written down and codified, at least a version that I'm comfortable with actually testing out. I'll test that on the micros, but I've got them done so far for MES. R2K, which is the micro version of the Russell because it's the 2000, and the Nasdaq, which oddly enough, the Nasdaq actually I managed to come up with a way that looks really good on the chart, and I'm like, wow, this is really smooth. And then I look at all the bars, and I'm like, holy crap, these are like every bar has a range of like from high to low of like 80 points, and so I'm like, this is going to be trickier than I thought. But the results are so far promising, and if I can figure that out and get the NASDAQ to work for me on somewhat of an automated mode. Well, the NASDAQ, as far as the indexes for futures go, is the real moneymaker. I prefer the S&P just because the price action is a lot less, for lack of a better word, terrifying. Because and I'll get to the Dow in a second. The Nasdaq is just like it's extremely volatile. It moves extremely fast. If you're good at scalping, that's where you want to be. But for NQ, it's just like if you are not like a money manager, you never want to have an open position on some sort of macro event like the FOMC, CPI, whatever, because like if you're in the right and it like just shoots up by like 50 points in 30 seconds, then by all means you're going to make a lot of money that day. But if you're wrong, well, that's a huge loss. And if you don't have a big account, which I frankly do not have a huge account, then it's going to kick your ass. Like it really will. It'll destroy you. Even if you're just like scalping MNQ during the day, like if you're not an experienced day trader, you're not going to do a really good job with it, probably. You might get lucky. Um, but yeah, just experiment with the various indexes in just like one lot sessions, see what fits you the best, and then go with it. Which the S&P is just what fits me the best. But I'm always trying to branch out, so you know. All right, so we're looking at copper now, which, as I was saying yesterday, we came up to this resistance point and it bounced back down. However, if we go under the indicator here, we are still in overbought mode, which I have explained before is basically breakout mode, um, which it works a little bit differently on copper just because copper's extremely, uh, just the price action is very different. Personally, I probably would not trade copper off of indicators. That's just my personal taste. Maybe it'll work on day trading. I've never day traded copper before. I will have to admit that. However, on swing trading, you want to be really careful because, like an indicator, like you can see down here. Well, if the all these buttons would stop popping up, but you see down here that it just jostles in and out and in and out, and you would lose money. Like you'd be getting in and out of trends as soon as they ended, and the new one on the opposite side began, so you'd be losing. But for now, we're going to keep this long position, which we're still good. We are up by nearly $2,000, not as much as yesterday, but that's just how it goes. So far, I'm reasonably happy with how this trade is going. We've got a solid foundation on top. You can see these the wicks here, as well as the top of this candle is like right under where the bar for today's after hours session begins. So that'll be something to keep an eye on. Moving on, we've got oil, which we had a red day for the first time in a couple of days, which is not really something to be concerned about quite yet. We are approaching the all-time highs here, though, at least as far as this year. I can't remember if crude has ever been higher than around 85 a barrel. Maybe adjusted for inflation back from back when Bush was still in office. Because gas prices right now are like in some places they're as high as when he was in office, right as the 07-08 thing was going down. But at the same time, when you factor in the 13 years now of inflation, like it still is not quite as high as it was. So we'll have to keep an eye on this. But on the daily, though, we are still in our breakout mode, which, as I've harped upon before, like if we had entered a short position here as soon as it got above into the overbought area, that would have been a bad idea, which is why I don't do that. Like I've looked at tons of indicators, and stochastics was one that I was just like, oh, this could be really useful. But then, like, I'm reading all the guides on how to use it online, and they're like, in this case, you should do this, and in this case, you should do that. And it just, like, it always seemed to me there was just, like, like maybe this worked 70 years ago, back when there wasn't so many people like in the market and there weren't like algos and stuff and auto trading and all that. But these days I just don't see it working nearly at all as well as it used to. Which is why I came up with my own method, my own settings, and all that stuff. So we are going to keep it in the long position for now. We are still quite good here. I think that we still have some room to move, at least a few more dollars a barrel maybe. And if we break out of here, depending on what OPEC does and what the government decides to do with all of our oil policies, we might see a breakout even higher. I'm not counting on it because that would be very bad politically, and they're starting to gear up for the running for the midterms and all that. So who knows? I don't know. I don't predict things. I look at my charts, which, speaking of which, the 8-hour chart is not quite as good on oil as it is on all of the other stuff, at least as far as the stochastics modified down here is. I will say, though, it works pretty well on the modified MACD. However, it doesn't really react to the high volatility areas quite as well, but I mean, MACD never has. Although there are some settings that I've tooled around with that do kind of solve a lot of the problems it has. However, I leave it on the settings that I have right now because I like to day trade with the settings that it has. But I've got a couple of different presets for different conditions. I tend to stick with what I'm best at because I just don't have a ton of attention a lot of the time. Because of school and all that stuff. I was doing a lot of experiments when I was trying to juggle all of my classes, and yeah, I have rambled quite enough. So back on the 1 day, and moving on to natural gas. So natural gas had a bad day. That is a bear signal if I've ever seen one. However, I'm going to wait and see how the overnight session goes, and if it's red in the morning, then I'm going to go ahead and just take a short position. Save some of our profit here. I've gone over the macro factors that I like to consider when trading natural gas a million times at this point, so I'm not going to bother to cover that again. But we entered the trade when it was still down like around here, give or take, and we were getting like just in and out and in and out, and then it finally went up, and so I want to hold on to that for like at least a little bit. What else do we have here? We got our bonds, which have started to rally. They're still in the breakdown zone though. Going to keep them right there. Not going to cover that quite yet. We used to be up like, I think it was like $9,000 on this, and now we've been cut down by just a little bit, but that's okay. The 10-year has not moved up quite as much. They have similar price action. However, the 10-year, I'm a lot more comfortable with trading this one on like day trading, but apparently the bonds are just better for swing trading. I don't know, maybe this is a fluke. I don't touch the treasuries that often. It's just not my thing. So, going on to silver. We are still long silver. Hurrah, that is one of our saving graces today. That was only mildly down. One of the things that I am going to be keeping an eye on is that this might turn into a double top situation. But if it does crash all the way back down here, we might have another chance to load up, because I haven't really seen silver go below this level in quite a while. It's been all the way since 2020. So this is a pretty solid area for us to load up on. We'll see how that goes. I might go short in the next week or so, but for now, we've got a pretty solid distance between the K and the D lines there on the stochastics, and our MACD is also still positive on this. So we're going to keep that as is. So we are up to $90,000 in equity from our $59,000 when we revised this experiment. I consider this a success. A success, excuse me. Although I would have liked to have kept it over 101,000, where it had kind of peaked at yesterday afternoon. That was pretty nice. But that's fine. In my own live account, like, I don't have to wait for indicators to do stuff. I'm just like, I think this is what's going to happen right now, and I just kind of go with it. I have if I remember correctly, so far, 83% of my trades this week were positive. It would have been 100, but I actually lost 2 trades today, which was fine. That was on the S&P. I took 2 5-point losses because I have a 5-point trailing stop whenever I take those, because I figure I'm usually pretty confident when I'm taking them, and so when it gets to the point where I'm 5 points off, then that's a pretty clear case that I'm wrong. And I'll actually show you exactly where that was. It was 11:51 p.m. today that I made the trade after those 2 losses, because I kind of went and took a break to go eat and take my dog out. So I'm gonna go ahead and put on the 5 minute here. So 11:51 until 12:21. I only remember the number off the top of my head because I was telling somebody about it, one of my trading buddies. I was just like, let's see, yep, 11:50 right there. And then we went red, and then we lost this support level of this little channel that we're in, and then right on down. And I closed out right at the end of this bar. So I made a solid, I want to say 30 points off of that. So off of the first 10 that I lost, which was my fault actually, because I had woken up late and I decided to be a contrarian trader, and it didn't really go well for me. But then after that, I was like, all right, hold on, we'll figure this out and we'll do a better trade. And so I went in on this one after several seconds of deliberation, and it just started collapsing. And yeah, so it got down to a certain point, and I closed out of the trade, and so I ended up a fair amount today. Like I said, around like, I want to say 22 or 23 points on the S&P. I think I made 5 on oil. And then last night, before I had gone to bed, I scalped half a point on the S&P. So whatever that adds up to, I don't know. But anyway, I have rambled on enough. So this is the result of our. I think it's now a month that this has been going on, where we take a look at the swing trading off of the indicators that I wrote up. But anyway, personally, I am of the opinion that tomorrow will be a down day. We are certainly in for some chop. One thing before I go is I was when I was talking with one of my buddies about the he was mentioning how he thinks the next major level is going to be 4,600, which yeah, it is. That is certainly going to be a major level because of down here, as well as all of the wicks over in this range. However, the spot that I pointed to was 4635, so up closer to right about here. Because as you can see, we got these 2 wicks right here before the move up, right here, and right here. Just like total chop zones. Total chop zones. So those are going to be some important levels. But we got our Fibonacci stuff here. And I can't remember if I started it from down here. I think. Was it here? I don't know. But anyway, after I had drawn that up, I was like, for the hell of it, I'll throw in my Fibonacci's. And so I drew that, and I was like, I could have saved myself some time there, because that would have told me exactly what I needed to know. So yeah, if you've never used Fibonacci stuff, definitely take a look at it. It's very useful. When I'm day trading, I don't use it, because when I'm day trading, I use my VWAP with standard deviations, because I like to trade, whenever I'm day trading, I like to trade off of what is actually going on rather than what did happen. And that's one of the weaknesses of indicators, is that they are lagging. They tell you what did happen, what might happen, kind of. The information that I get from these is very much provisional. I can trade entirely off of my stochastics here, off of ES, and in fact I do on my swing trades. But on day trading, that's just really not going to work a lot of the time. Like, yeah, you'll get lucky, but the problem with stochastics on the day trading stuff is that if you're doing it off a time chart, or even just a tick chart that's kind of slow, a lot of the times you're going to get knocked in and out of trades left and right, even if the trend is solidly in one direction. It's just kind of how it goes sometimes. And MACD is a little bit more consistent there because it's slower, but it also does some weird stuff when you've moved too much in one direction too fast, I guess. Um, for example, you can see how the MACD was fully green through this entire run up until here, which is like the first sign of it dying off, which is fine. That's perfect. Um, However, it kind of stays red, even though at the, let's see what the closing price is, 46.75.25. Um, if you were holding it all the way from when it was red, that is a pretty solid amount of points that you'd not only be missing out on, but also losing. And if you have any more sort of stops or an account that can't swallow that kind of move, then that's not good. Eventually, you would break even because it finally goes green again right around here, which is still higher than it was. That's 46.76.25. And 46, yeah, so you would have come out minus a point after all that. So yeah, MACD is very, very situational. I like it on day trading, not on swing trading, and especially not on the indexes. Oil, it's not too bad, but oil, I still prefer my stochastics because I literally redesigned this thing so that it would be a directional indicator that tells me when stuff's breaking out and breaking down. Like, it's a combination of really fast moving averages and RSI at the same time, basically. However, I like it a lot better than moving averages and RSI. I have no use for RSI personally, and moving averages are good for like kind of gauging the trend overall for a while, but I still wouldn't trade on these most of the time. Because you can see on the big moves like, oh, it crossed up here, and so you go long here, and then it crossed down here, so you would go short here. Well, that doesn't help you when it suddenly smacks you in the face. And then you've gone long here, and then it goes all the way back down, while the thing's still been relatively flat. So it's all perspective. This everything that I ramble about just kind of comes from years of experience. For a while, I was trying to take the easy way out. Like the first couple of months that I was trading, I was trying to copy people on stocks and stuff. Then later on, I was trying all different kinds of experiments on like indicators that would work on like trend trading. But the problem was that like the 2017 bull markets and all that, it's just like there's good saying that everybody's a genius in a bull market, and that was absolutely true. And so I was coming up with these strategies that would have worked in the near term, and then whenever like significant volatility would happen or news events or whatever, it would suddenly just kind of hit me in the face, and it'd be like, this would have worked in the past, but now it doesn't work anymore, so you're wrong. And as a result, I kind of bashed my face against the brick wall as an engineer, and went and started just designing strategies that would work in any type of situation. And for the most part, my stochastics here, I can actually use it on both day trading and swing trading. It's certainly designed for swing trading, but it does kind of work on the day trading, especially in the 15-minute. I've noticed 15-minute, for example. Let's see here. We would have had a short signal at 10 after. Because like we're in a breakout area here, so right around the open, so I would not take a trade there unless I'm feeling particularly stupid, because going up like that, I would probably buy and I would immediately tank because that's my luck in life. But anyway, so at 10 we have a cross under here into the channel, so I would probably have opened up the trade shorting at 47.18, and then it would have come down and then crossed back up. So I would have come out with a 1 point profit, gone long, then done terribly, and then stayed short, mostly rode this whole wave down, apart from a couple of jostlings, and then this giant fall right here would have been my only saving grace for today. So despite the fact that today was a huge loss from the open, let's find 930. So I can kind of judge that. Okay, so 47.30 all the way down to a close of 46.56. If you just shorted at the open, you would have made a lot more money than just using indicators here. and that's why indicators are they're just a crutch. They're a tool. You don't want to use them as a crutch. It's different on the volume tick chart, which isn't available on TradingView. Otherwise, I would have it set up on here. But I've checked on their Reddit, and I guess a lot of people have asked for it. So hopefully they'll figure out how to do that. Because I'd really like them to. Because I like TradingView's tools. I like how their programming works. But with the volume tick chart, it's pretty easy to catch reversals. I've noticed it since I started using that just kind of recently, actually, at least compared to how long I've been trading. My entries and exits have gotten significantly better. Like that whole point around switching back to the 5 here. That whole point about like going short here, or rather here, well, whatever, it doesn't matter either way. If I was just trading off a time chart like the 5 minute, I'd have gone 47.13 going long. Had a short signal at 47.07, so there I go. I've lost 7 points, and then I've kind of made some, gone long again, then lost basically because I'd be getting told to go short like right at where I had entered the trade to begin with. And then it would have worked for the rest of the day, which you may have noticed that this would have gone a lot better than the 15-minute chart. The 15-minute is kind of like you really don't have time to watch it so much, so you leave it on there and you set yourself an alert system because TradingView can send alerts to your phone. But the tick chart was just a lot better. You can try certain things, like the 3-minute chart is a lot more responsive. Like I like doing the excuse me, the 3-minute chart in combination with this. Although you will have areas like this, which again is really choppy, but then you get into this downturn really early and only kind of have like one little bit that kind of knocks you out. Although you can have personal rules like, oh, the indicator was giving me a signal to go long, but I had a red candle, so I'm not going to do that, which would have worked here, and I've done that sometimes. One of the other things that I like to do is like if it's giving me a signal to go long, but it's bashing against the VWAP and it's just not going anywhere, I might give it a chance to actually close above the VWAP first before I actually do that. Because the VWAP is a great indicator for judging support and resistance. But anyway, I have rambled on enough now. So I will see you guys tomorrow for the week's close, and hopefully we will get some money back.